Okay, it's interesting times for our market. One day to go and we have the big union budget upon us. There's the US FOMC meeting. We've actually lost count of the number of triggers that this market has, and we're just taking it 1 hour at a time. But L&T is the stock in focus this morning after a good set of numbers that it reported. Vivek is here to give us the fine print in case you missed out on it overnight. In fact, our entire research team is joining in. Hi folks, morning. Vivek, let me come across to you. How did L&T look?
Well, good morning. A mixed quarter as far as L&T is concerned. Very strong order inflows, very strong order inflow guidance. But the marginal risk was as far as, the EPC margins was concerned. And, which is why we're going with the marginal red as far as L&T is concerned. Now, however, the management commentary, especially in the conference call, was extremely positive. They said that, in the first 9 months of FY23, the order inflow has been much stronger than what they were anticipating. And in fact, they've actually said that they will most likely meet the upper end of the guided order inflow band. Analysts believe that they may be able to exceed it as well. Now, looking at the numbers itself, revenue is up 17.5%, largely in line with our estimates. The EBITDA margin, softened a little bit, and that's the key disappointment. 10.9% is where it came this time around, and profitability, on back of the lower margins came in, slightly below the estimates as well. Two key takeaways, the company has said that likely to beat and achieve the higher end of the 12 to 15% order inflow as well as the execution guidance for FY23. However, the company's core margin guidance has been cut from 9.5 to 8.9%, and that's the only disappointment from L&T this time around.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Sonal. Sonal, BPCL's numbers look good.
Yes, they did actually. It was a top-down beat led by the refining segment. If we talk about the basic numbers, revenue growth of 4% to come in at 1.19 lakh crore rupees. EBITDA came in higher on a quarter-on-quarter basis at 4,200 crore rupees. The expectation was of around 3,800 crore rupees, so that's a 400 crore rupee beat. EBITDA margins at 3.6% versus 1.3%. The poll was at 3%, so that's a 60 basis points beat. Net profit also higher at 1,959 crore rupees versus an estimate of 1,436 crore rupees. The reported GRMs this time around came in at $15.5 per barrel versus an estimate of $15 per barrel. Not only that, even the marketing volumes came in higher at 12% growth on a sequential basis versus an expectation of 8% growth. Margins on petrol now are at 10 rupees per litre, while on diesel it is a loss of 6 rupees per litre. So on the back of that, Jeffrey says that now going ahead for all the oil marketing companies, the big trigger is the upcoming budget, because it should give more clarity on government support to the OMCs, because the prices of both petrol and diesel have been frozen. So that is the next thing that we'll be watching out for. But today for BPCL, it's a green.
Right, thanks very much, Sonal, for that. Now, Tech Mahindra reported numbers after market hours yesterday. Rima is here with more. Rima, hi, morning.
Hi, morning. So it's a mixed quarter for Tech Mahindra. Revenue is muted, but margin expansion is more than what the street was anticipating. So on the top line, the company has reported a revenue growth of 0.2% in constant currency terms on a quarter-on-quarter basis. This is lower than our estimate of 0.5% and weaker than what peers have reported. The company said the impact of furloughs was about 1%. Some of the furlough impact will spill over into Q4 as well. And CLSA is saying that they're estimating a flat quarter for Tech Mahindra in Q4. Weakness was seen in manufacturing and the BFSI vertical. But as I said, the margin performance was better than what the street was anticipating. Margins expanded by 60 basis points to 12%, ahead of street expectations, and deal wins too at $795 million is an improvement of 12% on a quarter-on-quarter basis. So weak top line, good margins and good deal wins. Back to you.
Okay, all right. Thanks a lot for that, Rima. Let's hop across to Abhishek. He's tracking a few more numbers. Abhishek?
Well, to begin with REC, it's a weak set of numbers coming in from there. The net interest margin and spreads are at 19-quarter low of about 3.55% and 2.75% respectively. The gross NPA ratio, that is at 5 years low at about 3.63%, and net NPA ratio is at 7-year low of about 1.24%. They had strong disbursals momentum, up about 150.3% YOY and about 66.25% on a sequential basis, but this has not translated into AUM growth. That remains weak and in single digit both YOY and quarter-on-quarter. The net interest income is down 12.5% YOY and about 11% sequentially. Operating profits, they continue to decline on a YOY basis for second quarter in a row. Lower provision, or let's say provision right back this time around, aided the PAT growth both YOY and quarter-on-quarter. IIFL Finance, now a secured product like gold finance, is seeing a disbursal to AUM ratio of just 6.3%, which is astonishing, or actually a weak point in the results. Overall, its disbursals to AUM growth is just to 20%, which is on the lower side for secure product and long-term products. So disbursals are up 22.5% YOY and about 8% sequentially. The AUM growth is about 24% YOY and about 4.8% sequentially. Asset quality has improved. Both the gross NPA and the net NPA ratios have improved. The NI is up 33.8% YOY and about 8.8% sequentially. Calculation shows that the net interest margin has expanded both YOY and quarter-on-quarter. So the net profits, that is on a consolidated basis, is up about 32.7% YOY and about 0.7% sequentially. Back to you.
Got that. Thanks a lot, Abhishek. Well, there are a bunch of other numbers that have come through. Nippon India AMC, Astec Lifesciences. Surbi is tracking all of that for us. Surbi, over to you.
Hi, thanks for that. To start with Nippon Life, the company has reported a good set of numbers. Revenue and profitability both were above expectations. Revenue was up 7% sequentially at 354 crores. Their core operating profit, that was up 10%. Their quarterly average AUM was up 4%. This was due to higher flows in the B30 markets. The yields were better than expectations at 48 basis points versus 46.5 basis points in the previous quarter. Moving on to Astec Life, the company posted a poor set of numbers. It was a top-down miss. The revenue was down 32% on a year-on-year basis at 117 crores. Their EBITDA was down 72%. Their margins have more than halved at 10% versus 25% same time last year. And the PAT is down 97% at 84 lakhs.
All right, thanks very much for that. Well, back to Sonal with more earnings like MRPL, Orient Electric, Inox in focus. Sonal, hi.
Good morning. Well, let me start with MRPL. Good set of numbers. If we talk about the revenues, they're up 8% on a quarter-on-quarter basis. The company has reported an EBITDA this time of around 290 crore rupees. However, they still have made a loss, but the losses have contracted. So losses at 187 crores versus a loss of 1,800 crores on a quarter-on-quarter basis. GRMs at $3.88 per barrel versus negative GRMs in the quarter gone by. Orient Electric now, weak set of numbers. Revenues were up 9%, but EBITDA down in 18%. Margins also declined by 200 basis points. Profits were down 13% as well. In their segmental revenues, both of them did well in terms of revenues, but it's the margin miss which leads to the red tick on the stock today. Inox Leisure, again, it was a margin miss. So while revenues were up 74%, EBITDA was up 31%. Margins declined to 33% versus 44%, and it was a net loss of 40 crores versus loss of 1.3 crore rupees, also because of a lot of one-offs as well. They had the highest average ticket price of 230 rupees and highest spends per head at 106 rupees.
Okay, thanks a lot for that, Sonal. Thanks to our entire team, actually, for giving us all the updates so early this morning. Here's a quick recap of our top stocks in case you missed out on them. Positive news flow coming through from BPCL, IIFL Finance, Nippon Life and MRPL, while stocks with negative news flow, L&T Tech Mahindra, Astec Lifesciences, Orient Electric and Inox Leisure. But let's also get you a quick update on what's happening in the world of commodities. Remember, there's a global rate hike looming, especially from the US as the FOMC meeting begins. Manisha Gupta is joining in. Manisha, gold, rather Brent, has been hovering around $85, $86 a barrel. How's the mood going into the FOMC?
Oh, well, slightly on the choppy side, clearly, Sonia, as you mentioned, it's going to be a very data-heavy week. You have the US Fed meeting, and then you also have a follow-up from European Central Bank and the Bank of England. Those meetings are also slated in this week itself. And key economic indicators from China and European Union are also on tap this week. So the moves are subdued ahead of the policy meetings from all of these banks. There is some profit-taking as well, as the US dollar index has gained. So you have the Brent prices now down 2% in this week already ahead of the US Fed meeting. Overall, the energy pack has been slightly on the declining side. So the coal price is trading at a 6-month lows now. below $300 a ton. You have the U.S. gas prices trading at the lowest since April 2021. And we have seen the prices for gas in U.S. decline by nearly 30% in the first month of 2023. You mentioned about gold, and yes, that is also on a declining spree. We have seen a high of $1,950 an ounce in the previous week, just about holding $1,920 or $1,925 right now. Even the silver prices have come off at 7-month highs. Copper is now off at 7-month highs as well. So the very strong start that we saw in the last 15, 20 days in the month of January, some profit taking now seems to be hitting the street.
Okay, profit taking hitting the street, Manisha. Thank you very much. We'll come back for more later. We'll take a quick commercial break here.